Good morning, gang. Good afternoon, good evening, or good night, depending on where you are in the world. Welcome back to this week's Bitcoin update. First and foremost, remember, nothing discussed is financial advice. It's for educational purposes only, and it's my view of the markets. And now we've got that out of the way. Right, I'm going to keep this video as short and sweet as I possibly can. I'm going to allow you guys to learn from what's been going on, and then talk about basically where I'm looking to do business next. Okay, so first and foremost, let's start off, because obviously since last week, where we were last week, when last did the video, we were down here, and since then, obviously we've had this rise to the upside, which then had a really clean rejection before another move to the downside. Okay, so not a lot's happened, but effectively a couple of tradable ideas have happened. But effectively, I'm going to bring you in from Monday, because obviously I talked about last week how we shorted this within the group. This was one of our planned setups for quite a long time. Just a quick recap, nice and easy. We had this from here to here, and basically looking at this as a one-to-one, some sort of corrective move, regardless however you look at it. Nice and easy. Within that corrective move, you've got a B leg, which is a flat. Okay, nice and easy is that. If you understand Elliott Wave, if you don't, that's something that you should start to learn. Obviously prices moved down, and then obviously prices moved up here since then. And effectively, I'm coming into the group on Monday after witnessing what's gone on over the weekend. So this was the weekend price action here. And then obviously we started to have this rise here. Now, this is where my plans came into play, and I'm going to talk you through these plans so you actually understand them. So you can see here, if you follow me on Twitter, you've already seen this. If you don't, then there you go, you're seeing this for the first time. So what I was looking for here is, when I were doing the morning plans, as you can see here, we'd already put in this first high and then come back down. Now, the reason why we put in that first high was nice and simple. It was just effectively a golden pocket from the top to that local bottom. We'd tagged that golden pocket absolutely perfectly, and obviously got this rejection down. So obviously, if you took that trade, absolutely valid setup. Can't fault it. Now, what I'm looking for here is, if, now this is the key word, if this doesn't go down further and this continues to go up, where am I next looking to do business? Okay, if being the operative word. Okay, I didn't know this was going to do this. All I knew that if it did do this, then I've got a trade opportunity. Okay, so if I delete this squiggle now, bring this back up, and you can see here where I'm looking at. Now, to make this really clean, I'm going to put it on the chart for you. So, this move that happened over the weekend, I believe, was a triangle. Now, this isn't the comedy triangles that you see the kids of Twitter doing. This is a triangle in terms of Elliott Wave, A, B, C, D, E. Now, what I'm looking at here is I'm looking at this as a corrective move from this low, moving up in 3 waves. So if we attach it to the E of the triangle, where it should be connected to the start of the triangle, what we have here is a nice 3-wave corrective move. Wave up, corrective, wave up, 3-wave corrective move. Now, the icing on the cake, what turned price around here? Because obviously it came above that golden pocket. Once again, that golden pocket, valid short. I'm not going to grumble about that. But what turned price around is a lot of confluence. So what we had here, if we do a volume profile, in fact, I'm going to fixed range of volume profile from the high, and that was that one-to-one that we shorted in the first place, down to where price was when this triangle formed here. And what you can see here is obviously this is where it rejected. Look on the volume profile here. This is where it rejected, but we had another high volume node just above it, standing all by itself. So if we are to come up and run these highs, which were Asia's highs on Monday after weekly open, and ideally if it happened in the New York session, because that's an important trading session, then we've potentially got a setup. So not only did we have this channel, we had this move up, corrective, move up with a triangle, we also had, once again, a nice one-to-one. So from the bottom to the top of the triangle, predicted from E, which is the last point of the triangle, one-to-one, once again. So we had that one-to-one coming into a high volume node, which then would run Asia's highs into the channel on New York session after New York open. Then we've got a nice rejection. So what this is, what I would consider is a high probability trade. There is a lot of confluence for this trade we not only had the channel, we not only had the 1-to-1, we not only had the high volume node, sweeping of Asia's highs, but obviously we had the time as well because it happened on New York session. Okay, so a really nice short trade. Okay, so this is something that we had planned in the group for if we got that move. Again, I didn't know that move was going to happen. I wasn't drawing this squiggle saying this is what will happen. Saying if this happens and I get my rejection here, then I'll be looking to add back in to my short trade. This short trade from here, obviously taken profits as price drops. Then I look to add back into said short trade. So then it drags my average entry down. Okay. And then that brings us down to where we are right now. Now, since then, for me, there's been no real strong trades to be had. The only real strong trade that was had was quite simply, it was just a scalp trade, nice and simple, off running these lows. Okay, because we had a naked point of control down here. Let's see if I've got this on loaded up already. Yes, we do. Okay, we had a naked point of control down here. We ran the lows. Then we got a low time frame, and I'm talking the 1 minute chart, low time frame scalp. Okay, you can even see here, yesterday's move came back down into another naked point of control, and that's what caused today's bounce. Okay, another region that I was looking to scalp. However, it happened during the nighttime for me, so therefore I didn't trade it. Okay. Outside of that, within this whole section, outside of that one scalp, this whole section, I've been saying to the guys in the group, really don't like this peer, personally sitting this one out, I'm going to pick up my little lad instead. Okay, saying that, as this happened, as this did break some lower time frame market structure, and I know a lot of people will have been looking for the market structure break up here, then looking to get back in on a pullback. Now, I'm saying to the guys, I don't like this price action. And the reason why I don't like this price action is because we had a slow bleed environment once again. Now, this slow bleed environment, very similar to what happened, if you cast your mind back, I banged on about this for a long time, to this. To this. To this. Slow bleed environment. If you understand what a slow bleed environment looks like, especially on the order flow, when you can see people aping long but getting no follow through and it's just been absorbed into a downtrend and it's never changing, higher time frame structure, it's just bleeding down, you know to sit out and wait patiently. Okay, so since then, the only ideas I've had for a potential trade was this naked point of control down here to run a few stops and get a little bounce, this naked point of control was down here, which is what stopped price action last night, got a little bounce. Outside of that, they are just scalps. They are just low time frame trades. Okay, the better trades are potentially lower than where we are right now. If we get a drop, if we don't get a drop, then that's absolutely fine. It can absolutely do that if it wants. Okay, right. So that's moving on now to what we're looking at next. So first and foremost, I am just going to drag as usual one of these on. There we go. You can see here we're still within value. Okay. We're in value of this whole range. We're still within value. Now, locally, where I'd like to trade would be if price comes lower and takes out these lows here. Now, these are messy lows with poor lows created on TPO. Okay. Now, ideally, I'd like it to drop down under 60k in an ideal world. Ideally, around to this sort of zone here. Now, if price does drop down to this zone down here, give or take 58, 57, 58k, basically this last sticky zone here, and then we get a positive reaction within this, then yeah, fair enough. I will be happy to look for a long trade. Now, does that mean that long trade is going to go all the way up here? No. But from a confluence perspective, this is the most confluent zone that we have on the chart below us at the moment. Now, does that mean if it loses that, it's going to go straight down and crash? It doesn't, no. It just means this is a zone on the chart where I'm interested in doing business if price goes there. If it doesn't go there, I've got no trade, and it's simple. Okay, so that's what I'm looking at locally. Now, if it loses that and starts coming down lower, then realistically, for my next trade, I'd be looking to at least sweep these lows, but more than likely, possibly lower. Okay, my ideal lows to be swept would be these down here. And I know a lot of people watching this video, especially if you're new to the channel and you don't understand how to trade, You'll say, oh, but Spitty, it's never going to come back down there. It's never going to, you're a bear. I don't know if it's going to go down there or not. All I know that if it does go down there, I'd potentially be interested in a trade because I'm a trader at the end of the day. Okay. So if it does come down and just quite simply, it pops below, goes back up, gives me an opportunity, shows me some strength in this region, runs a few stops, then yeah, great, cool, I've got a trade set up. If it doesn't do that, then I've got no trade set up. Quite simple. Doesn't mean I'm going to be leaving limit orders down here because that's not our trade. I want to see price come into the area. Then I want to see my confirmed entry criteria, ideally with some strength. Then I'll look for a long. Okay, and if that doesn't happen, I'll look for lower prices. You guys already should know where I'm looking for. Now, upside, where does it start changing? Where does this start looking better? Well, first and foremost, take out these highs without a pullback. What do I mean by that? Well, don't come up, swing fairly pattern it, and start to drop again. But more realistically, if it can flip above this zone here, this is a sticky zone for me because obviously price has gone sideways for a while. We've got a lot of confluence in this area. So if price can get beyond this and continue pushing up past 67, 67.3, which was the old point of control, then it starts looking more bullish. Now, does that mean bullish 100k? No, that means more bullish towards value area high. We've still got levels. It's what people seem to ignore. People ignore these levels, which is why everyone was longing here, and I whinged about it last week on the video, saying, oh yeah, it's come above this high, long, it's going straight up. No, because you're ignoring levels. Don't ignore levels. If you want to trade, don't ignore levels. So if we can flip this zone, then yeah, we can look for higher prices. First and foremost, we need to acknowledge 67.3k, which was the old point of control of this section. So that would be the next sticky zone. Come up here. That's the next sticky zone. Does it reject? Yeah, cool. I've got a short trigger. If it doesn't reject and it just continues to flip and breaking through all these, yeah, that's going to look quite good. It's the next zone. Can it flip that? If you can flip out a value, then yeah, the odds then increase to coming up to create a new all-time high. Does it have to create an all-time high? No, it doesn't, but the odds increase. The all-time highs, it just simply do that. Yeah, cool. I'll short it. I will short an all-time high. I won't short up here. I will short if it starts to break down and losing some structure. Then yeah, I'll short that because that's the higher probability trade. Okay, if it doesn't do that and it just runs, let it run. I'm going to make reference again. 76k, 77k, still a big level. Still a big level. Okay, I can't ignore that. Now, that's what we've got going on locally. Obviously, if it drops down, then I'll be looking back down towards that yearly open sort of region. That yearly open down towards worst case scenario around 38k. Now, does that mean worst case scenario it can't go any lower than that? No. It means that's where I'd be interested in trading. Yearly open. Just down here, around 43k. All the way down to around 38k. This cluster. This cluster. Okay. If it starts dropping down lower than that, then throw on a volume profile from the 15k lows up to the current highs, and you will see exactly where I'm looking to trade. All right. Hopefully you've learned something today. If you have, do me a favor, hit that like button. And yeah, let me know down in the comments. All right, team. Bye-bye.